Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And guys, holy moly, we lost a critical level. The market gap down, gap below this pink trend line from October low, and it tested that level as a resistant. Holy moly, a trend line that has been acting like a support level with buying pressure, keeping the market up in a bull trend since October low, acted like a resistant level. We got one day of this trend line giving us a roll change where it acted like a support, but Friday it acted like a resistant. Now I want to give you guys a reminder because we have people with selective hearing. Uncle Charles is an unbiased trader. I am a sheep style trader. I give you guys the bull case scenario and I give you guys the bear case scenario. Alright, I make these videos not for predictions. I make these videos to give you guys the levels, the setups, so you guys can trade them unbiasedly in real time. It's about reaction to what the price action is going to do. I'm not here to predict. In my opinion, that is what amateurs do. Most amateurs with red P&Ls are the ones trying to predict and try to control the market, acting like they can move the market. But retail traders do not move the market. Okay? Market makers move the market. Big money, whales move the market. Me and you, we don't move the market. That's why I just try to identify the levels and the setups and just trade them unbiasedly, level to level, with proper risk management. The idea is to follow the price action. We cannot move the price action, but we can follow it with proper risk management. If that sounds good, then let's prepare. So here in my Discord that I write every morning around 7 a.m. I try to do it by 7 a.m. Okay, I make it educational and I give the plan out. I give a bull case and a bear case. As far as the bull case, I mentioned that in Thursday's video that I was only bullish if SPY was above 401.7 to the 402 zone. That was the bull case. Now the bear case scenario, and I wrote here and I said it in Thursday's video. Like yesterday, I'm overall bearish below 401.7 to 402 zone. Okay? The reason for that, we go on the daily chart. I got my Fibonacci level from October low, 348.11 to February high, 418.31. The 23.6 retracement level is at 401.74. Okay, I give it a zone, 401.7 to 402, because a lot of time with these numbers they're not pinpoint accurate, so I like to give it a zone. Now I mentioned the reason for my bear case on Thursday was because we broke down that level 401.74 on Tuesday. Okay, and I talked to you guys a lot about price action concepts on this video, and one of those concepts is the roll change. Okay, when we see a support level, which was 401.7, break down, we want to see that level get treated like a resistance. So support turning to resistance is bearish. So we broke down on Tuesday, and on Thursday we tested that level. We tested that level as a resistance, okay? But we needed follow through. Remember in Thursday's video I said the bulls needed to show follow through. Since we had this bounce off the pink trend line and also off of Uncle's yearly trend line, okay, we got that bounce. All right, bulls stepped up where they needed to. They stepped up at critical support. But Uncle mentioned there needs to be follow through, which was above 402. Okay, did not happen, which kept me bearish. And now, not only did we lose that pink trend line, we also lost the 50 daily moving average. I call it the 50 DMA. Okay? So, now here is where Uncle gives you the bull case, the bear case. I tell you guys what happened and what I think of it. Now I'm going to tell you what the setups are and what my plan of action is. Bull case scenario and a bear case scenario. These are not predictions. These are just my plan of reaction and how I plan to trade this in real time, or what I will try to do at least. Okay, perfection is a road, not a destination. Okay, so I'm gonna start this off with the bull case, and then when I finish the bull case, I'm gonna say the bear case. Okay, please watch both of them. All right, please watch both of them. So, bull case scenario starts when the 50 daily moving average, as well as this pink trend line, recaptures. Okay, so the 50 daily moving average at 396.86. I'm gonna round it up to 397. Okay, my resistant zone is 396.5 to 397. I need to see 397 cleared and recaptured to give us a false breakdown setup. As you guys know, false breakdowns are very bullish setups, because the idea behind a false breakdown is that market makers are creating, certain support levels that they want us to watch, hence this pink trend line, and they'll try to break it down. Once they break it down and get people bearish, that's when they fake us out and push it up, giving us a false breakdown setup. The idea is to trick out retail traders. So my goal is to inform you guys of these type of trade setups and the idea behind them, so that you don't become a victim to them. Okay? In fact, you'll be able to use it to your advantage. And yesterday's level, which was based on the pink trend line and the 50 daily moving average, I gave it a zone 396.5 to 397. You can see how it tested as resistant. Intraday, that zone was tested as resistant. Okay? So in order to cancel that, we need to break up above 397, okay? And put more upside targets in play, which especially that 401.7 to 402 zone. If we could clear that, maybe we see more upside. All right, false breakdown setup is the bull case. Now the bear case scenario is if this breakdown holds. We didn't get a traditional breakdown. We got a gap down, and then we got a retest of that critical level as a resistant, which is good so far, but we need to see follow through on Monday where this level is holding. So it must stay above 397 and break down some support levels. Okay, I got 395. I also had a previous pivot low level I was looking at right here. Okay, this one right here on January 25th was around 393.56. I rounded it to 0.5, but we almost touched that level to 393.64. So definitely watch that zone. Okay, could be a double bottom around there, and also where the 200 daily moving average is as well, right around 393ish. Okay, so watch those support level. If we lose that 200 daily moving average again, could be very bearish, and I would favor a test of 391.5 and 390. 391.5 is the 38.2 fib level from October low to February high. Keep in mind. So if that level gets tested, bulls definitely want to step up there. Okay, so that's the bear case scenario. Stay below 397, and I am bearish. If it can recapture, I'll be short-term bullish, but I still would need to see 41.74 recapture for me to be more bullish. Because if that level defends again and then it pushed back down this trend line, it's just another dead cat bounce. Okay, so yeah, bulls have been stepping up where they needed to, right? But it all led to dead cat bounces. So remember these levels that I'm giving you. 397 is a critical level, as well as that 401.74 level. As long as these levels defend as resistant, bears, they got control right now. Okay, if bulls want back control, they need to recapture these levels. All right, unbiased price action analysis. Now triple Q. Okay, I had a fib level for triple Q. If I brought from all-time high down to October low. Okay, all-time high right there down to October low, and the 23.6 fib levels at 290.71. Okay, I mentioned to you guys I'd be bearish below 296, and we got a bounce around there. Look like a doji. So be careful when you see dojis like this. Market is trying to make up its mind if it wants to continue downwards or upwards. So that's why we got to watch the resistance level, watch the support level. So support is at 290.7. If that level was lost, I'll be very bearish. I got a gap fill around 287.7, 288ish, right around that zone. All right, 287.7 would be support. And if that fails, we could drop as low I got support here at 284.7 to 285 zone, and maybe we drop down to 282, which is another Fibonacci channel support line I got, and this support line around 279.3ish. Okay. To be bullish though, I got resisted at 293. I needed to see it clear 293, and maybe we test 296 again. Actually, my Fibonacci channel line slopes down to 295.5. So Triple Q will have to clear 293 and 295.5 to get some bullish momentum back in its it's on its side. All right, to put 298.7, 300. There's a gap around 303.4ish as well. Okay, so yeah, bull case for Triple Q starts with 293 and 295.5 recapturing. As of right now, it is looking bearish, but it'll have to break down 290.7 to trigger more downside. Okay, IWM, look at that. I mentioned that critical Fibonacci level 187.6. We got the close above it, but remember, we need follow through, so watch for the next setup, because if 187.6 recaptures, that's a false breakdown setup. It could trigger more upside back up to 191.7, 193.5, and maybe 196. As long as below 187.6, I would stay bearish. Supports at 185.5, 184, and 181.8. Okay, watch when the support level, add them to your charts. Watch for the breakdown. Okay, Apple looking a lot more bearish now. Okay, I couldn't get bullish unless it recaptured 150.6. Failed to do so. We had a gap down. Now we're testing this critical level around 146.6. If that can fail, I'm thinking we could go back and fill this gap around 145.4 and this support level around 143.5. All right. Right now, resistance at 147.2ish. Needs to clear that level to trigger a move up to 148.5 and maybe retest 150.6. Can't get bullish unless above 150.6. Right now, Apple's looking a bit bearish here. Tesla testing that white trend line. Big test. All right, didn't quite, came a few cents shy of it, but we'll see what happens on Monday because this trend line slopes up and the breakdown level is now at 194. Watch out for that level, guys. If 194 breaks down, it could be very bearish. 187.5, 183.7, and 176 would be levels that I'll be watching. Okay, also 180.5, forgot to mention that, all right? Can't get bullish unless 199 is recaptured to put 210 and 214 back in play, okay? Also 206 en route as well, all right? That's futures. Let me put on the VIX. Where's all my trend lines? Okay, so all right, there it is. VIX be playing tricks with me sometimes. So yeah, had that false breakout set up where the VIX closed below 21.2, 23.6 fib level, but it managed to recapture it the next day on Friday, yesterday. Okay, got this nice long wick here, so it's not looking too bullish, but still got to respect that it recaptured a level. So as long as above 21.2, VIX could stay bullish, but it's gonna have, it can defend the support, but it's gonna have to try to take out some resistant levels, especially that 23.8 resistant level. Okay, below 21.2, this could be a false recapture. Okay, we could see more downside on the VIX. DXY looking bullish. It managed to clear my Fibonacci channel line, and that level was at 104.7. So as long as above 104.7, this is bullish with 105.8 as the next target. And then what I got 106.6, 107.2, 107.8, and a big level around 109.4. Okay, stay bullish on the DXY as long as above 104.7. If it breaks back below that level, that's a false breakout, and false breakouts are bearish. Okay, now let's take a look at the option flow. I filtered for 500k premiums or above for the SPY. 59%, getting some mixed reviews here, but 59% for in favor of puts. Okay, we do got some calls here. 399 strike price February 28th. Interesting. Maybe I don't know about that one, but hey, that's what came in over 7,000 in size. Here's another one, another call You know, that's not big in size though. But this one is big in size, over 5,000 in size. This is puts, 386 strike price, but this is March 6th. So as you guys see, we're getting some mixed reviews on what big money is thinking. Not seeing anything clear here. Triple Q, 78% into puts. Okay, so yeah, this one over 500K in premium, 5,000 in size, 310 strike price. Okay, for March 17th. And this one that sticks out, wow, this is a sweep order for puts, 8,000 in size, 200 strike price for June 16th. Holy moly, that's really bearish. And IWM, yeah, 78% for puts. Okay, this one sticks out, over 800,000 in size, 175 strike price for March 31st. So from what I'm seeing between Triple Q and IWM, big money is bearish on IWM and Triple Q for the month of March, is what I'm seeing. All right, Tesla, 63% in the puts for Tesla. Nothing really sticks out. How about Apple? Oh wow, okay, 85% in the puts. Sweep order, this sticks out, 4.4 million, over 11,000 in size, 146 strike price. Not that aggressive, but it's for March 17th. We do got some calls above that, but they're not big in size. They're small sizes. 160 strike price for December 15th. That's further out. But for the closer date, big money is bearish, and that's pretty aggressive. And here's the VIX, and 100% for puts. Interesting, different from what we saw the other days. Okay, so thank you guys so much for watching. Remember, this is not a prediction thing. Okay, this is just me giving you guys the levels and the setups so we can trade them unbiasedly to react and also to manage risk. That is the point. Okay, if you want more content from Uncle Charters, please consider joining my Discord. Other than that, have a great weekend.